Hello and welcome back to Global Value. In today's video, we're performing a fundamental stock analysis of EOG Resources Inc., ticker symbol EOG. So we're looking at the business today as a subscriber request. It also falls in line with looking at other oil and natural gas businesses. And right now, EOG Resources has the added benefit of paying out a very high 7% dividend yield, which is 4 times better than the yield of that of an S&P 500 ETF right now. So currently, EOG Resources is trading for $132.75 per share. Over the past year, their stock price is up 26%. This is similar to other stocks in the energy sector who have drastically outperformed the S&P 500 over this period. Over the last 5 years, EOG Resources is compounding at a rate of 2.5% annually. They're up 14% overall. The business is up more than 4 times from their lows in March of 2020. Over the past 10 years, EOG Resources is compounding at a rate of 7.5% annually. And going back prior to the global financial crisis, over the last nearly 18 years, EOG is compounding at a rate of 11.5% annually in their share price. Keep in mind again that the business has this high dividend yield of 7% currently, and that their average dividend yield throughout this period would be in addition to this compounded annual return. So it's likely that EOG Resources has outperformed the S&P 500 over the last nearly 2 decades or so. So right now, EOG Resources is down $18 from their 52-week high. They're up about $40 from their 52-week low, and they're a very large business. They have a $78 billion market cap. So for additional background about the company, EOG Resources is an oil and gas producer with acreage in several U.S. shale plays, including the Permian Basin, the Eagle Ford, and the Bakken. At the end of 2021, it reported net proven reserves of 3.7 billion barrels of oil equivalent. Net production averaged 829,000 barrels of oil equivalent per day in 2021. At a ratio of 72% oil and natural gas liquids and 28% natural gas. So the company was formerly known as Enron Oil and Gas Company. EOG Resources Inc. was incorporated in 1985 and is headquartered in Houston, Texas. So for our fundamental analysis today, we are performing the Select 6 analysis, taking a checklist-style approach of 6 standard financial metrics to come to a holistic and beginning understanding of EOG Resources based off of their business fundamentals. So this analysis is still an evolving process, and it's a work in progress, and so it also serves as an opportunity to learn in public. So it will continue to improve and get better over time. With that said, let's get right into today's analysis. So starting things off with metric number 1, we want their average return on capital over the last 5 years to be above 14%. And there are 2 key reasons for this. The first is that over the long run, over the course of decades, a stock is likely to return approximately what its underlying business returns, and these business returns are going to be captured here by return on capital. The second is that the average publicly listed business earns about a 7% return on capital, so by asking for a benchmark of 14% or higher here, we can potentially build in some margin of safety for ourselves based off the overall quality of the business being about twice as good as average. As an oil and natural gas producer, EOG's return on capital is going to fluctuate with the price of oil and natural gas, so that's not surprising, and that's pretty much what we're seeing here with their return on capital numbers. So as the price of oil and natural gas have risen post the COVID-19 pandemic lockdowns, EOG's return on capital has really gone through the roof. Over their last 12 months, they're earning about a 29% return on capital, which is up very significantly compared to these past 5 years, and is more similar to how their peers are also faring in more recent years. Averaged out over these last 5 fiscal years, however, EOG Resources is just averaging about 9.5% average returns on capital. So while that is a few percentage points above those returns of a typical business, that's below that 14% benchmark we're ideally looking for. And so this is an X to start things off here on metric number 1 for EOG. Next up, for metric number 2, here we're taking a high-level overview of the growth of their business. So we're looking for revenue, net income, and free cash flow growth over the last 5 years. And this metric is going to be all or nothing in nature. Either all 3 of these are going to be up for this to be a check, or if even one of these is down, this entire metric will be an X. We'll also be including their last 12 months worth of numbers in our calculations here. So over this time, while their revenues have fluctuated and they nearly dropped by half from 2019 to 2020, EOG's revenues are up by actually 2.5 times when we include their last 12 months worth of numbers. That's been a similar story for their earnings as well, with their earnings almost tripling over this period, but being negative in 2020. And then their free cash flows are also up very significantly. One thing that's nice about the company is they did have positive free cash flows throughout all 5 of these years, and the business is producing $6.2 billion worth of free cash flow in their last 12 months alone. So this is strong growth across the board here for EOG. This is our first check of the day on the business, and it's especially great to see such strong free cash flow growth for the company because free cash flow is really the lifeblood of any business, and a business can use its free cash flows to reinvest back in the company, make acquisitions, pay dividends, buy back shares, or pay down debt. So ultimately, a business's abilities to produce free cash flows now and until Judgment Day, discounted back by some reasonable interest rate, is what that business is going to be worth. So great to see such strong growth here for EOG. Again, our first check of the day on metric number 2. Next up, for metric number 3, here we're taking the perspective of an individual shareholder in EOG by looking at the company on a per share basis. So we're looking for earnings per share growth over the past 5 years. We learned in the previous metric that their earnings have nearly tripled over this period, and at the same time, EOG has had very marginal shareholder dilution at best, so they've issued about 1% additional shares over this time frame. And over their last 12 months, EOG is earning $12.74 per share. So this is strong per share growth here for EOG, and this is another check on metric number 3. Metric number 4, we're looking for something very similar. So here we're looking for free cash flow per share growth over this time frame. Again, for very similar reasons, with their free cash flows being up strongly and just marginal shareholder dilution at best. This has led to strong free cash flow per share growth for EOG. In their last 12 months, they've produced $10.57 worth of free cash flow for each share that they've had outstanding. And this is another check here on metric number 4. So far through our first 4 metrics, we have 3 checks and only 1 X for EOG Resources. Next up, here we're evaluating how the business is utilizing debt. So we don't want to be investing in overly levered businesses because during economic downturns, it's overly levered businesses that are going to be at the greatest risk of poor outcomes. EOG has prioritized steadily reducing their net debt position dating back all the way till 2017. So the company only had about $700 million worth of net debt at the end of 2021, and since then they paid this down even more. Currently, they only have $47 million worth of net debt. So this just absolutely pales in comparison to the more than $10 billion worth of free cash flow that the company has produced over these past 5 years. And with the business producing $6.2 billion of free cash flow over their last 12 months. This is a minuscule amount of debt that the company is using. So this is a massive check here for metric number 5, as the business is strongly cash flow generative relative to the very minimal debt that they're employing in their business. Then our 6th and final metric, the big metric of them all, we want their average free cash flow to their total enterprise value to give us a yield that's above 5%. If this is the case, this will potentially give us a slight risk premium to the yield of the 10-year treasury, and it'll likely offer us a reasonable starting point for a valuation of the business. We're using their total enterprise value because it takes into account both their market cap and their net debt position, and it's going to give us a perspective of EOG that's more similar to as if the business were a private company. Right now, EOG Resources has a $78 billion total enterprise value, and we learned that over the previous 5 fiscal years, EOG Resources has produced $10 billion worth of free cash flow, meaning that in an average year, they're producing about $2 billion worth of free cash flow. So when we divide their $2 billion of their average free cash flow by their $78 billion total enterprise value, that only gives us about a 2.5% average free cash flow to enterprise value yield for the business. So that's just about half of that 5% risk premium that we're ideally seeking, and that's also coming in below the yield of the 10-year treasury. So on an average basis of their free cash flows, this is an X here for EOG. Again, however, the business is producing significantly higher free cash flows over their last 12 months than where they've been at historically. As we learned in our previous metric, the company has produced $6.2 billion worth of free cash flow over their last 12 months alone. So to get a current free cash flow to enterprise value yield for EOG Resources, when we divide their $6.2 billion of their last 12 months of free cash flow by their $78 billion total enterprise value, that gives us above an 8% current free cash flow to enterprise value yield for the business. So on a current basis, it does look like EOG Resources would be potentially offering us an attractive risk premium. And so because on an average and a current basis, these are on either side of the fence here for EOG, it's likely that the economic reality for the business lies somewhere in between the two. So even though this is an X here on metric number 6, this could still be an interesting company to dig in and do more work on, especially with some of the prevailing trends in the oil and natural gas industry. Then as a bonus, here we're taking a look at EOG Resources dividend profile. So again, the company is currently paying out a 7% dividend yield, which is 4 times better than that of the yield of an S&P 500 ETF currently. However, it's really easy for people to make mistakes by blindly chasing dividends. So it's important to stop and look at the underlying fundamentals of a business and to determine whether that business's dividends are well supported by either their earnings or their free cash flows, depending on the type of business. For EOG, we want their dividend to be supported by their free cash flows, and that's been the case in 4 of these previous 5 years. They did not support their dividends in 2017, but they've steadily and pretty easily been able to support them since. Even in 2020, when they had negative returns on capital, they still had positive free cash flows and healthily supported their dividend payout. And both in 2021 and over their last 12 months, so much of 2022, the company has both increased their normal dividend payouts per share, and they've also issued special dividends as well. Due to their extremely high free cash flows over this period, likely a lack of significant investment opportunity, and very minimal debt for the company. As a shareholder in the business, you're likely happy with management's capital allocation decisions over these previous couple of years, and so it looks like even if they're able to maintain just slightly higher levels of free cash flow than where they've been at historically over this period, that they'd be able to easily support their typical dividend, and if they continue having these super high free cash flows, relatively speaking, that they'd probably continue paying out these special dividends as well. So again, because this is an oil and natural gas producer, their abilities to produce free cash flows are going to be somewhat cyclical in nature with the overall pricing of oil and natural gas compared to the difference between their exploration and production costs. So you'd likely want to understand some of the more qualitative aspects of the business as they operate in a commodity industry to understand if they potentially have something like a low-cost producer advantage. And don't worry, we'll cover that in just a little bit. But first, we have to talk about something else that's very interesting for the business. Everything we've covered so far is important, but there's something missing that, in my opinion, is the main reason to analyze EOG Resources, which takes us on to using a discounted cash flow model to come to a potential intrinsic value for EOG Resources. So a discounted cash flow model is just like any other model in any other discipline. Its outputs are going to be sensitive to its inputs. Here we're starting with an average of their free cash flows over their last 3 years to give us a somewhat normalized perspective of the business's free cash flows post the COVID-19 pandemic lockdowns. Then we're using historical growth assumptions for how the business has been able to grow their free cash flows over the last 30 years to project these average free cash flows out into the future. It's up to you to do your own homework here to determine whether or not these historical growth assumptions are going to be potentially accurate and applicable going forward to give us a baseline projected estimate for EOG Resources. So if we assume a growth stage over the next 10 years where they grow their average free cash flows at a rate of 5% annually, then we assume a terminal stage for the 10 years out after that, where these free cash flows grow at a rate of 4% annually. If we add in their tangible book value, which gives us an approximation of their tangible net worth, and we were ideally seeking a 15% rate of return from the business, which is the rate of return that Warren Buffett is typically looking for from investments, then it looks like a fair value for EOG Resources is approximately $103 per share today, based off of today's valuations. Right. There are some caveats to mention here. So one, this fair value assumes that the business would have the same multiples at the end of this 20-year period as they do today. Two, this discount rate would be including their 7% dividend yield, so we would not be doubly counting their dividends, meaning that their stock price would be compounding by about 8% annually over this period, if this is accurate for the business going forward. And then three, because they're an oil and natural gas producer and they operate in a somewhat cyclical industry that's prone to these boom and bust cycles, the future free cash flows of this business may not be as predictable as the future free cash flows of some other type of businesses. However, there are some reasons that are articulated by Warren Buffett for why the price of oil and natural gas are likely to remain higher and potentially do better into the future, likely with global production going down overall, but the price of these commodities going higher over the very long run. However, you'd still really want to do the work here and become an expert in this industry and dive deeper into EOG Resources specifically before making any investment. So please be mindful of the fact that this type of analysis is not financial advice, it's not a buy or sell recommendation of any security, and before considering any potential investment decision, please consult with the properly licensed and registered legal and financial professionals. So in just a minute, we'll talk about our recap for EOG Resources, but we have to address something first. What are some of the qualitative aspects about this business, especially those that support either the key points for a potential long or a potential short thesis of the company? So starting with some of the key points around a potential long thesis for EOG. Number one, EOG often adds new premier drilling opportunities to its queue via exploration or by using improved know-how and the technology to upgrade opportunities that did not previously qualify. Number two, EOG's vast inventory of premium drilling locations provides a long runway of low-cost resources. And number 3, EOG is among the most technically proficient operators in the business, with initial production rates from its shale wells consistently exceeding industry averages. Then for some of the key points around a potential short thesis of the company. Number 1, global demand growth for crude oil is finite, stopping EOG from ramping its output as much as it would be able to like to. Number 2, EOG's commitment to cash returns reduces its flexibility to take advantage of downturns by buying stock when shares are undervalued. And number 3, the premium portion of EOG's inventory could run out after 10 to 15 years if the company fails to replace the locations it drills with new opportunities. So hopefully that offers a balanced perspective around some of the key qualitative aspects of the business. Now it's time for our wrap-up. So in summary, EOG Resources checks the box on 4 out of our select 6 analysis metrics. They're earning average returns on capital of about 9.5%, so while that's a few percentage points above that of a typical business, that's below the benchmark we were ideally seeking. However, the company is earning 29% returns on capital over their last 12 months. Then, even though the business dipped during 2020, their revenues, earnings, and free cash flows are all up massively over the past 5 years. With just marginal shareholder dilution, they've had strong per-share metric growth as well. Then the business is using just a minuscule amount of debt relative to the free cash flows that their company is producing. And this is especially the case when we look at their current free cash flows. When we evaluate the business's average and current free cash flows to their enterprise value and look at that compared to the yield of the 10-year treasury, it looks like these are on either sides of that 5% risk premium that we're looking for, with a current free cash flow to enterprise value yield for the business of about 8%. So again, it's likely that the economic reality for the company is somewhere in between the two. So it may be worth your while to dig in and learn more about the business. Then finally, it looks like EOG has supported their dividends in all of the years since 2018, and that they've been paying out this special dividend and returning this additional capital to shareholders over their past 2 years. And with the company's higher free cash flows in more recent years and their very slight manageable debt position, it looks like the company is easily able to support their typical dividend payouts using their free cash flows. Then finally, performing a discounted cash flow analysis of EOG Resources. If you've done the work and you believe that those historical growth assumptions are going to be potentially accurate and applicable going forward for the business, then it looks like with today's valuation multiples, if you were seeking a potential 15% rate of return for the business, that a fair value for EOG Resources would be about $103 per share. So that is well within range of where the business has been trading over their past 12 months, and the business got to around that point in July of 2022. However, there are some caveats that we touched on that would be applicable here, and you still want to do your own research to dig in and learn more about the business. So it's worth reiterating that this type of analysis is not financial advice, it's not a buy or sell recommendation of any security, and before considering any potential investment decision, please consult with your financial advisor. This analysis instead serves as a beginning and holistic understanding of EOG Resources to help you determine whether it's worth your time and energy to dig in and learn more about the business. One resource that will definitely help you stay up to speed with what's going on in the market and help you learn more about the business is Seeking Alpha. Checking out Seeking Alpha directly supports the channel as I'm part of their affiliate program. So most of you probably know Seeking Alpha as a source of community-written articles on different stocks. But over the past little while, they've actually become a lot more than that with their new offering, which is Seeking Alpha Premium. Premium has a number of different features where you can track buy, hold, and sell ratings on your favorite stocks. These ratings are from the Seeking Alpha community, Wall Street analysts, and Seeking Alpha's algorithm. You can see earnings call transcripts, investor presentations, SEC filings, and press releases all in one place. You can add your own margin of safety targets and get alerts for when your favorite stocks hit that level. You can get unlimited access to Seeking Alpha articles, and you can tailor your reading experience based on the type of investor you are. You can get 10 years of financial data on any stock to help you with your analysis. You can also import your portfolio into your Seeking Alpha dashboard to make researching easier. And if that didn't convince you, the best thing is that an annual plan is only $119. That's just 33 cents per day through my referral link down in the description below. Normally premium is $239, but if you use my link, it's 50% off. So check it out if you're interested. So as a value investor, you're ultimately trying to conduct this research as if you're going to own 100% of a business, and you can truly understand its essence and understand what's important and what's not important for the company going forward. So through this deeper research, you'll learn more about the qualitative and the quantitative factors that influence EOG, and you'll likely be able to determine for yourself what a reasonably appropriate intrinsic value for EOG Resources will be. So with that said, that's it for today's fundamental stock analysis of EOG Resources Inc., ticker symbol EOG. Again, we looked at the business today as a subscriber request, so I'm happy to make an analysis of the company. They're currently paying out a 7% dividend yield, and looking at the business follows the trend of looking at oil and natural gas energy businesses that we've been covering more recently. And if you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next time. Thanks for learning about EOG Resources with me, and have a great day.